I had another question, actually, kind of. I do think that as an individual angel, due diligence is completely overwhelming, right? So two things, like what are the most common ways that you've seen individual angels sort of reduce the due diligence burden, either through working with an institutional investor or a network, or coming in to as a co-investor to like established rounds, and as an individual angel, like what's the bare minimum that you look at?
So what I've seen is angels are piggybacking on or relying on deal flow that is coming out of accelerators, training programs, because that has been cleaned up a bit and has been vetted. So that's one route. It brings down drastically the headache around due diligence. You're right, it is overwhelming, it's a lot to do. What I've also seen is more syndicates around the angel. So they'll ask you who else is investing in this round. Yes. And sort of they then talk to each other and say, okay, what have you checked out? Where do you have concerns? Okay. So that they're sort of doing a check to see what diligence each one has done and where they have concerns. And the others, yes, yeah, we're increasingly seeing, and I know I'm doing it as well. We're increasingly seeing collectives and syndicates that are led by, if you like, more institutional type investors that are either, again, domiciled within or backed by accelerators, or are doing this as their primary business. And then they're inviting angels to invest alongside. So I'm seeing that as well. So that's how people are addressing it. But if I were to, what do you look at as a minimum? I spend time on the team because they are going to be executing this. I'd spend time because that's something internal. You want to understand the CEO is coachable. You can work with them. They can lead people. I'd spend time then on just understanding the problem, solution, and market, because those are a bit external. You know that you're getting really a large enough opportunity, and then you try to dictate or get standard investment terms, which means you're saying, oh, domicile in my jurisdiction that I understand, or let us use standard agreements if there've been any developed by a venture capital association or an angel network association, or that have been used on other deals like this before. So if I were to pick 3 areas, maybe those, I don't know, it's hard, but those are the areas I'd pick. Because if you know the entrepreneur and they have the ability to be pragmatic in solving problems, if the problem is big enough and the time is right to solve it, they'll find the ways to solve it, either technology, either other types of tools. So I'm not worrying so much about how they're solving the problem and monetizing it. Yeah, and the terms are key because those are legal terms.
Yeah, that all makes sense. That's really good guidance. And we can also, throughout the course, provide references to some of those institutional investors, networks, and accelerators that angels can work with on the continent. So if anybody's interested in joining some of those.
Sorry, I have 3 quick questions.
Yeah, tell us, Aziz.
One of the slides you speak about like the stock options. I'm not sure if I get that, or I'm not sure how to phrase the question too. How would the numbers look different if you have employees, stock options, and corporate, or integrated to the together? So I'm not sure how I understand that slide. If you can go to the stock options.
Yeah. So I think maybe the way to explain it is, if you start a business and there's 100 shares to allocate, and amongst the founders, you give yourself 50 shares, it means there's 50 more to allocate. If I come in as an investor and I want, say, the rest of the shares, 50 of them, and you've not allocated shares to employees to employees, and yet you're not paying well enough, in future, if you need to grow the business, you need to give employees some shares so that they can stay in the business, because you might not be paying so well, but they may be willing to pay for shares. If you had not made this provision already and shown it, then you may ask me as the angel investor that, can we take some shares from you to give employees? Or you may have to take from your shares as the founders. Now, either way, if you took from my shares, of course, I do not want it as an angel investor. You're diluting me. But if you take from your shares as well, it maybe disincentivizes you as the founders. So it's important that even before I come into your business as an angel investor, you know that you may need to retain employees by giving them some shares of the company, and you've already planned for this. So there's no surprises, and you align incentives and you keep the good employees so that the company can grow. So it's more a situation, or it's more related to just making sure incentives are aligned to make sure this business will grow. And you, as an angel investor, want to make sure that the business is thinking like this and has planned for this. I hope that clarifies.
Yeah, this is clear. Thank you. But do you mean like for me as a business owner or investors, stock options different from bringing an investors? I'm kind of confusing in that part.
Yes.
Like,
So, yes.
It will be investor for legally, or how they do it?
So stock options are different from the kind of shares you'd give an investor. So they're different. And yes, we could go into detail with them, but it's a whole session. But the way you do it is you give employees the right, but not the obligation, to be able to buy shares in the company at a certain share price. So you give them that, they have that right, and you have shares available in case they want to exercise that right. The way you make, sometimes the way you make it simple is by just saying we're putting aside these shares for employees to be able to give to them. So it is made available to the employees by the company itself.
So can the employees sell his stocks to anyone?
No, now the
like
employees,
it's based on the agreement.
Yes, this is in the agreement. So that's why I was telling you, in the employee stock option agreement or in the shareholder agreement, usually there will be first rights of refusal for the companies to buy from the employees before they can sell to someone externally. So that would be embedded within the agreements.
Thank you. This is actually a really good option for investors to have. You can still control your investment. I think it's a really nice way. Thank you.
Rachel, there's a comment there, just asking your thoughts on a lot of money chasing a limited number of legitimate opportunities.
Yeah, thanks, James. I just realized that I was typing a long response, but I could just speak a response more easily. I think that's definitely true, and it's been true for a while, mostly in the most popular markets, like in Kenya, for example. There's certainly a saturation of impact capital, less so in higher risk markets for obvious reasons. But I think it's long been mostly true at later stages of investment. So a lot of the impact funds are seeking sort of growth stage investments, not early stage. And so there's the most competition is at that point in the market, which is less relevant to angels. And actually why we need more angels, because there's been a lack of high risk early stage capital that's exacerbating this problem, because you're not creating more pipeline for those later stage investors. I think that I've seen in the last couple of years, more funds coming in and more investors coming in at early stages. And so I think the competition at that early stage is growing. But I do think that if you have the right local partners who can work with entrepreneurs to develop their business hands-on, and if they have, the benefit of an accelerator or some of these programs that Kenneth was mentioning, then there's still plenty of pipeline out there. Kenneth, what do you think?
I agree that there's a lot of there's been competition at the later stage. So I think the role is in creating investable opportunities and investing at the earlier stage. Higher risk certainly, but there's still not as much competition. And I agree with your point around certain countries being more of a focus. And actually, one of the things I've been pondering is, why can't I, as an investor in Uganda, invest in startups or companies at an early stage in Malawi or Angola, or why aren't we encouraging this as local and international capital, so we don't all crowd into the same markets,
Absolutely. I think there's huge opportunity in those other markets, outside of Kenya, Nigeria, South Africa, even Uganda, you'll say, I think and Tanzania are getting, a lot more attention than some of these other markets. And if you can find the right local partners who know those markets, I think there's enormous opportunity.